Hi, this is Michael Adams for Stock-Telegraph International Edition. Last week I met a very interesting company while I was in Vancouver. It's Global Minerals, and the company is trading on the TSX Venture, and the symbol is CTG. And yeah, we invited my colleague Joachim Brunner and myself. We invited Tim McCutcheon, who's the CEO of the company, to give us some more insights today. Hi Tim, thanks for taking the time to talk to us. We've met you like two weeks ago in Vancouver, and you gave us a really interesting presentation on Global Minerals. The company's trading on the TSX Venture, and the symbol is CTG. And you have a very interesting silver project in Slovakia. And yeah, it's our pleasure that you can give us some more insight. So maybe you just start by introducing yourself and then just go through the presentation.
Sure. Thanks for the introduction. My name is Tim McCutcheon. I recently moved to Vancouver about a year and a half ago to be more involved in the junior mining industry. Before that, I lived and worked in Moscow, Russia for almost 20 years in the metals and mining space. I was the metals and mining analyst for Atom Capital, which was Russia's largest brokerage firm. From there, I started my own merchant bank called DBM Capital, and we were the largest player in the precious metal space, both in terms of M&A and in terms of assets under management. One of my key clients was a company called Avoca Gold, which was traded on the London Stock Exchange on the AIM board. I was the CEO of that company for 3 years, and then came to Vancouver about 2 years ago just because I wanted to get bigger and better exposure to the junior mining space. Global Minerals, I basically joined in June of this year. I've had a dialogue with the managers of Global Minerals now for several years. But it's really a neat little story because it gives good exposure that I'll talk about to the underlying silver price in a nice jurisdiction. And the key thing about the company, I think, is that it's about as turnkey as you're going to get. So why don't we just jump into the presentation then?
Yeah. So you have been in contact with the company for quite some while before you joined it, or?
Yeah, and in fact, my dialogue with the board of directors has been going on for about 2 years now. So we're trying to figure out how we can work together. And of course, one of the ideas, which is still on the table, but one of the key ideas back then was is any way to bring Russian capital into the story as well, because as you know, there's a lot of money in Russia.
Right.
And Slovakia is a country where they're very comfortable just in terms of political risk and cultural business attitudes.
Yeah, and they have kind of a history together, right? It was all the
well,
Eastern
it's
Bloc.
a Slavic country, right? So,
right,
yeah, it's a Slavic country. So,
okay.
This is our standard disclaimer, just to put it up there for your audience to make sure that they understand the risks of junior mining investment. So our main listing is on the TSX-V in Canada. Our main office is in Vancouver. This is where I sit, where the CFO sits, our corporate secretary. Our head geologist comes back and forth to Vancouver, but he actually sits a little bit south of us in Washington State. And of course, the regional office where we work is in Rožnava in Slovakia, which is the eastern part of Slovakia. One of the key things about our management team is, and I'll go over this later in more detail, but the key thing is that most of the management team, when it comes to operational experience and know-how, is from operating and exploiting a deposit that's very similar to the deposit that we own. So in terms of the metallurgy, in terms of the type of mining, the people we have on our team have done the same thing in the past, and that's part of the reason why they're involved in this project to begin with. Okay. And then of course, one of the key things about this is that the ore body that we will be exploiting is a new ore body. It has never been commercially mined. But the actual mining complex that we'll be using to exploit this ore body has been up and in production and used for almost 100 years. So a lot of the risk associated with actually putting infrastructure in place, power, foundations, people, your social license to operate, a lot of those risks are gone by virtue of the fact that this operation has been in production for almost a century. And then, of course, the key thing to keep in mind, given that we're a EU asset-based company, is we have the permits to mine. We have a full mining permit for 300 tons per day at our core property. And as you probably are aware, lots of mining companies, everything looks great, but then when it comes down to getting a license, they run into a lot of problems. And we're not in that position. So it's a key differentiating factor between us and some of our peers. So 40 million shares out, 15 million warrants out. Right now our market cap is bouncing between $6 million and $10 million, basically depending on the share price. Because our share price is low, there's a lot of volatility, as you can imagine. Okay. We have no debt as well. Sure.
Yeah, no, sorry. If all the warrants and options are exercised, okay, the options are a little bit out of the money, but the warrants look pretty good. So what will that bring in cash into the company? I could do the math, but you probably know.
It'd be about $5 million.
Okay.
It would be about $5 million.
It's a lot of warrants. Yeah, you have these 13 million warrants which are coming due in
in a year and a half from now.
Yeah, 1 year. So how come that this is like such a huge block?
I'll make it perfectly clear. My career has been basically coming into companies to make them better and to clean up certain situations. Okay. This is certainly not what I would like. This is what I have inherited this. Okay. Basically, the company got taken over by some technical people. They were very strong in terms of technically advancing the company. In my opinion, they may have gotten a little bit too far advanced into technically studying, doing analytical work and laboratory work. And what happened is that they lost their momentum in terms of the market news flow and how they were developing it. I think they were a little too aggressive in terms of announcing their certain goals that they wanted to achieve. And so the end result was the share price did very poorly. Basically, the entire junior mining space did very poorly, but the share price of this company did very poorly last year. And they needed money, and so they had to do a very large share issuance. But at the time they did the share issuance, in order to make it attractive to the investors, they had to attach a full warrant to the issuing. And because of that, that's why we have so many warrants outstanding. It's not because I think that's a good thing. I personally, obviously, I'd like to have smaller amounts of warrants because it's less dilution and more predictability. It's something I've inherited. It's there. I don't think it's a massive problem. I think it's just one of those things that you have to be aware of, that when the share price hits 35 cents, obviously there's going to be some resistance because people will be cashing in their warrants and whatnot. Right. But right now we're trading between 15 and 20 cents, so there's plenty of upside to get the 35 cents before that becomes a problem.
Right.
But before we come, this is the financial side, but you say also you have permitting for 300 tons.
Yeah.
That means you should have high-grade stuff.
That's right. I mean, one of the key thing, the permit came in May. We got the permit last May, so we got it 4 months ago. And one of the key parts about the permit is that the permit allows us, the permit coincides very closely with the capacity of the existing infrastructure, right? So we will be using the existing infrastructure in place that I mentioned before. This is a production complex that's been in production for 100 years. The ore body we're mining is brand new. No one's ever mined it before. The permit allows us essentially to duplicate the same thing that was done in the past. More or less. So that's a key part of what we're doing. And one of the reasons why the permitting process for us was so easy is that we permitted the operations of the mine to be more or less exactly the way it was when it was in production up until 1992. So in terms of the local people in the town, in terms of the local neighbors, there will be nothing new for them to get used to get adjusted to. All the trucks are going to be going in the same directions. All of the power and work, everything's going to be exactly the same as it was up until the end of 1992.
What are the capex to restart the production?
Okay, well, I can get to that in a minute, but in general, we let me put it this way. When I joined the company, my background is a banking financial analyst background. And when I joined the company, like I said, we were bouncing between $8 and $10 million market cap company. Okay, and I told the management when I joined, and I had a site visit, and I said, look, we have to be aware of. I'm a very practical person, And so I'm trying to be as practical as possible about this, because being a banker, I've sat on the other side of the table where people come to me with these little tiny companies and they say, we want to build $1 billion mine. And I say, well, that's great. It looks great on paper, but it's never going to happen. So with Global Minerals, I said, I think our maximum capacity in terms of raising money through debt and equity is $30 million. That would be our maximum capacity. And so I guess the point is that I have directed our consultants, our engineering consultants and our mining consultants, to work together a plan that can put us into production for less than $30 million. I think what we're trying to do will cost around $25 million. One of the key things I'd like to point out is that our preliminary economic assessment is due out in about 3 weeks.
Okay.
And when that comes out, there'll be a lot of science and a lot of hard analysis to some of the numbers we'll be talking about today. And of course, along with my disclaimer, I mean, a lot of things that I'm saying is just my intuitive sense as a manager and someone who's been in this business. Of course, the PEA that comes out is going to have much more solid numbers regarding the math and the economics of how this mine's going to work out. So let me get to that as we go forward. I think we talk a lot about these reasons right now. The key thing I point out in this slide is that anytime you're investing in a mining company, at the end of the day, what you're trying to do is get leveraged exposure to the underlying resource. No one buys a mining stock because they want exposure to mining. It's like buying Walmart stock because you want exposure to, sewing, or, buying the Gap, right? You don't buy Gap stock because you want exposure to cloth. You want exposure to a specific idea. If it's consumer retail, that's what you buy into, right? If it's global growth, then you might buy into something like an oil and gas company. If you want exposure to silver, then you buy a silver mining or silver development company. And the whole point is that you have to make a better return than just buying silver, right? And so that's called leverage. Now, there's leverage that you can use with debt to get leverage, or you can use operational leverage, where basically you're taking a risk and it creates the same idea as leverage. Now, the leverage that Global has is that we give you leverage to the silver price. And so what balances out leverage, right, which is return, what balances that out is various risk factors. But what I think is very important about Global is a lot of those risk factors are gone. The geological risk is basically gone. So much work has been done in the past historically. We've done a lot of work. There's an enormous amount of data on the ore body that we're going to mine. The execution operational risk, most of that is gone because we're simply reopening an existing mine complex. So we know the power works, we know the roads can get there, we know the railway works, we know that the people who we're going to hire know how to mine because they used to mine in the past. So a lot of those risks are gone, so you have a lot of leverage which has implicitly has a lot of risk priced into it, but a lot of that risk is gone because of the nature of our operation. So that's a key thing that I like to point out.
Right.
So let's move forward, because a lot of this we've gone over. Slovakia, for your audience, it might be a fairly familiar country. It's a small Eastern European country, very industrialized, lots of infrastructure, enormous amounts of foreign direct investment. So a lot of companies have set up shop there, whether it be IT, whether it be production, manufacturing. For example, U.S. Steel, which is one of the world's largest steel producers, they have a steel smelter right next to us in a town called Kosice, which is about 50 kilometers to the east of us. In fact, our entire mining complex is part of a greater industrial base that used to be iron ore mining in that area to make steel. Okay. And so that's really how the Strieborna complex came into existence. Plenty of water, plenty of electricity, and so we feel very comfortable there. And for people who don't know, Slovakia is part of the EU and is part of the Eurozone.
Tim, do you know about the unemployment rate in Rosnava right now?
It's horrible, which is good for us. It's 25% unemployment.
Okay.
And if you walk into the Rosnava, is a cute little tourist town. It's got a little old center and a church and everything. And you can tell when you go in there that this town came into existence because of the mine. I mean, the mine, basically, the main shaft that goes down into the workings underground is in downtown Rosnava. It's one of these strange situations where you can come out of the mine, cross the street, and get a beer at a pub. So very similar to a lot of underground mines in Africa or in underground mines in Latin America, where the town was developed because of the mine.
So it's a
The
little bit
mine is
like Timmins. I've been to Timmins, which is a
exactly,
mining town, and it's really like you described it. You can walk out of the mine, and then there's like restaurants and a Burger King and a whatever, right? So okay,
exactly,
okay,
exactly. And the reason that's important is one that the town knows how important mining is. The local mayor has written letters of support to us saying that they'll do whatever he can to make sure we open up. The fact that the mine has been closed for 20 years is part of the reason why unemployment is so bad in the region. So we have a lot of local support to get this thing up and running.
okay, cool.
So we talked about earlier, and Joe, you asked this question about the history of the project. This is a 3D map of the underground infrastructure in place, and you can see all of the underground workings, all the white lines there on that slide.
Mm-hmm.
That used to be a big vein that they mined for iron ore.
Mm-hmm.
And that mined for many, many years. And in the end of the 1980s, they were running out of ore. And so they said, maybe we can find some more. And they came out to another vein parallel to it, which is what's all the colored blocks in that slide. And they found Strieborna. And they mapped it out completely. Plenty of samples were taken throughout the ore body. And that's the basis of a lot of the data that we have. But what happened is by the time they got around to exploiting it, if you remember what happened in 1989, the Berlin Wall fell down, and then by 1991, basically the Eastern Bloc collapsed, and also at that time, commodity prices were hitting all-time lows. So the mine closed down. The mine completely closed down, and then of course, privatization happened, so there was an ownership change, an issue there in the early 1990s. So right when they got set to developing the Strieborna ore body, everything fell apart. And so that's why we have the benefit of having a completely explored ore body that's never been commercially mined. So let me go to the next one. Remember that past picture. Now, this blue blob right here is a long section of that model there, the block model. So if I were to take a cut right down the length of it, I would get this model.
Mm-hmm.
Now, what this blue blob shows is that we've gone down 700 meters below surface. We've taken numerous samples, both historically and we drilled out ourselves. And one of the key developments that happened was on July 7th of this year, we announced the results of channel and panel sampling. So we took actual material from the ore body. What we did is we used the existing underground infrastructure and basically drove a tunnel right into the vein. And so we have an active mining face right now that has full electricity, ventilation, rail, lighting, everything that goes right into the ore body. And we took samples right there. And that'll be very significant because what that will show you later in the next slide is what we plan on mining. Joe, you mentioned earlier about 300 tons per day and that you want to have a high-grade ore body. Well, keep focused on that. The little black dot on that long section, remember that black dot, okay?
Okay.
All right. Moving forward. That big blue blob, the entire blue blob is this resource right here, right? So it goes all the way down to 700 meters. It's almost 3 million tons of material, 266 gram per ton silver, 1.2% copper, a very solid ore body, nothing wrong with that, okay? But at 300 tons per day, which is what my license is, I don't need 3 million tons of ore. It's too much. So I want to focus in on the high-grade part of this resource, right? And just focus in on that part. And when I focus in on that part, I want to say to myself, well, what are the economics going to look like? How can I get a better idea of making money on such a small operation? Well, you remember that black dot on the long section?
Mm-hmm.
Okay. These are the results from the black dot. And the black dot, what we showed is we have anywhere from 2 to 5 meters wide of mineralization with a grade that is anywhere from 70 to 90% higher than the grade of the whole resource. Right? So look at the numbers there. 266 gram per ton silver, And then look at the numbers here. 483 gram per ton silver, 496 gram per ton silver, 613 gram per ton silver. Significantly higher grade. And what we believe is that this area right here is representative of the high grade zone that we're going to focus on. And we're going to put the mine into production, 300 tons per day, so 100,000 tons per year, mining this type of material. Not 266 gram per ton silver, 400 gram per ton silver. Much, much higher grade, which obviously means better economics.
Right.
Mm-hmm.
The other key thing that I want to point out is that this ore body is going to be very easy to mine. 300 tons per day, as you're probably aware, is not that much material. Right? It's not a lot to mine. So it's going to be done by hand. It's going to be people there with jackhammers, basically, pulling out the ore, the rock, out of the underground tunnels. Number one, if you look to the picture to your right, you can see that the ore and the waste, it's very easy to see the difference. What that means is dilution should be very low, because our miners are going to know, the brown stuff good, gray stuff bad. It's going to be very easy for them to know what to mine and what not to mine. That's an important factor.
Mm-hmm.
If you look to the picture to the left, there's two things I want to point out. One is you can see how much renovation work we've done so far. We've completely this was all flooded. This was full of water when we acquired the property. Completely de-watered, new support struts all throughout it for safety, electricity, power, lighting, ventilation, rail. We own all of the rail cars. And if you look at the material in the cars, you can see that the ore comes out very easily. There aren't a lot of big chunks. What that means is that we'll be able to grind and crush the ore under a shorter grinding cycle. Right? We won't have to crush it for hours. We can crush it for a few minutes. Because there's not a lot of stuff that we need to crush, that means lower electricity costs, lower cash costs per ounce.
Tim, do you have an idea how much money you guys already invested into this restructuring?
Roughly about $8 million.
So
about $9 million.
Exceeding your market cap right now?
Yes,
okay.
yes, that's correct.
Mm-hmm.
Again, if we talk about the mine site, very important things. Look at the pictures to the left, give you an idea of the work that's been done. Complete renovation of the underground infrastructure. We have renovated everything down to 200 meters. So the first level, level 6, all of those tunnels have been completely redone. One of the key things about that is we know exactly how much it costs to do that. So when the PEA comes out in a few weeks, and the PEA is going to talk about the cost of rehabilitating the entire underground infrastructure, it will not be some number that we made up. It'll be a very, very precise number because we've already done it before for part of the underground infrastructure. That's a key thing. But again, an enormous amount of work's been done. If you look at the picture to the right, this gives you a topographical top-down view of the mine site. Now look at all of the red lines that run right in the middle of the picture. Those red lines are the existing underground infrastructure for that iron ore deposit. Remember we talked about that, Joe? That was mined out earlier? Well, that's what that is. The little yellow box, the one furthest over to the right, that is the above-ground infrastructure where we have the shaft that takes men and material down from the surface, down to underground. They walk through the existing infrastructure, and they go over to the Strieborna vein, which you can see there to the lower left-hand side of the square there. We'll be mining that. Now, one of the key things, you can see the yellow line there called the haulage tunnel. What that allows us to do is we can take all of the material we mined, and we can bring it to the other side of the hill where we're operating in. Why is that important? It's important because we don't have to truck ore through the center of the downtown area. I think you can imagine if we had to truck ore through the downtown area of a medieval town, that we'd have a hard time getting licensed. Mm-hmm. But the fact is that we don't have to do that. So we'll be hauling ore in train cars underground to the other side of the town. We won't disturb anyone. And then when it comes out from the surface, we already have an industrial complex there. We can crush our ore. We have power that goes straight to that site where it says crusher. You can see it. Yep. And there's a railhead there. So very, very close, convenient mining for us. The tailings facility is only 1.5 kilometers to the south of us. So after we're done making our product, which is the tetrahedrite product, we can then basically ship our tails in a truck 1.5 kilometers down to the tailing site. One of the key things in that box there, everything to the left-hand side of that is an industrial complex. So again, we're not disturbing anyone. No one's going to get upset because everything around the tailings area and where we're sending trucks are factories.
Okay.
So no one's going to be upset there as well. So the project concept is we'll mine 300 tons per day, manual labor. They scoop it up in those things called muckers, the little yellow truck there. They put it into the wagons. They ship it outside. It's crushed and ground at the surface. Then a flotation process. They separate the tetrahedrite. Tetrahedrite is what we want because that has the silver and copper in it. And it gets rid of all the other stuff. And our product that we're going to be selling is a tetrahedrite concentrate. Now the tetrahedrite concentrate has 4 things in it. 2 of them we like and 2 of them we don't like. We like the silver and copper. We don't like mercury and we don't like antimony. So there are things we have to do. We have to create the tetrahedrite concentrate. Then we send that product to a little facility north of Dusseldorf called Dila. They then do a process where they get rid of the mercury. Because with mercury, it's a very bad, no smelters want to take your product with mercury. There's nothing, it's not a problem, it's just an extra cost. So we take our product, it goes to Dila, they heat it up, the mercury comes out, the mercury gets stored, we pay them a fee. Then we have a copper, silver, antimony product, and that we sell to smelters. And depending on the smelter, they either give us a penalty for the antimony, or they charge some sort of fee for dealing with the antimony. Depends on, we're still working on that process with our counterparties. Okay. So it's a solvable problem. We're working on it right now. We have various quotes from smelters in China and in Canada. I'm working at quotes for smelters in Russia. There are smelters all over the world that will take our product because it's such a high content of copper and silver. But I just want your audience to know that this is an issue that we have to deal with. Okay. Now clearly the next step after we're producing, we're generating cash flow and everything's going fine, the next step is to go to a commercial bank and say, please give me project financing to put in a metallurgical factory to deal with the mercury and the antimony. And I'll do that in-house. But that's the next step. Because remember what we talked about before is at the current time, I think the capex that I can afford is maximum 30 million. Yep. I don't think I can afford more than that. So I got to get the project up and running first, show its commercial viability, then I can go on and possibly finance the recovery, a factory to get rid of the mercury and the antimony.
Okay.
Tim, one question. How much material do you get out from the 300 ton that you must ship to Düsseldorf?
Yep. So 300 tons of material is what we're mining, or we'll be making about 6,000 tons of concentrate.
A year?
Right? A year. If you do the math, it works out to being over 2 million ounces of silver and silver equivalent per year. And roughly 75% of that is silver and 25% is copper, but as silver equivalent. Mm-hmm. So for those of you, for your audience that thinks about, junior silver mining companies, we will be in the same league as a company like Great Panther Resources, or Scorpio Mining, or Excelon. All of these companies mine about 1.5 to 2.5 million ounces of silver a year.
Tim,
we will be in the same league as them.
What are the market caps of those companies you just mentioned?
Well, that's the whole point, right? Because we're right now trading at, call it $8 million market cap. We need to basically $25 million. A lot of that's going to be debt, not equity, to build this mine. And then we'll be producing 2 million ounces of silver equivalent a year. If you look at Great Panther, you look at Scorpio, plus minus, they're between 70 and 130, $150 million market cap companies. So there's a lot of upside between where we are now and where we will be once we're in production. And a key thing that your viewers should know is that everything we're buying here, none of it's fancy stuff. This is all off-the-shelf equipment. So once we get the money, from having the financing in place to production, very, very short lead time. We don't need a lot of time because we're just installing a crusher and a grinder and a flotation circuit in an existing production facility that already has power to go straight to it, already has a work site, and is already permitted. Key thing your viewers need to realize is that a lot of these companies that come out with PEAs or pre-feasibility studies, they look great, but they don't have the permits. And the permitting can take years in many jurisdictions.
Yeah, Tim, come back to the process and the whole thing. What the company expect on total all-in what? I cannot speak anymore.
Sustainable.
The cost.
Yeah. The cost. Coming back to the cost.
I want to make it very clear to your listeners that the PEA is coming out in a few weeks, and that'll have much more solid numbers. This is just my own sort of thoughts.
Yeah, absolutely.
Back of the envelope from what I've done, the math that I've done, I think will be $15 or less.
Okay.
$15 or less cash cost. I would be surprised if it was more than $15. I think it'll be less than $15. But I think $15. So right now, the silver price has been very volatile, and I understand that. Most of our competitors, like Scorpio or Great Panther Resources, they're also, if you look at the details, they're also around $15 an ounce. Pretty much the entire industry, if you're a primary silver producer, you're pretty much around $15 an ounce. The only people below that, for the most part, are people where silver's a byproduct. Copper miners, for example, where the silver production is simply a byproduct.
I think, Tim, that with $15, you're kind of on the low end. Yeah, I read a study that was probably like 6 months ago where it was like the all-in costs have been up to like 23 or something like that.
Yeah,
so,
it can be. Yes,
yeah,
that's true.
Okay.
That's true. So just to sort of round out the presentation, give you more pictures. As they say, a picture is worth 1,000 words. We have put in a water treatment facility that treats all of the water. There is some underground water in the mine. It's not from underground seepage. It's from rainwater that drips into the mining tunnels and everything. We pump it out twice a week. But the key thing is when we're fully operational, we already have this CapEx done. It's in place. If you look at the administration buildings, we've renovated many of them. They're ready to go. Again, this is a whole cost that we don't have to incur. So again, a big savings in terms of cost.
Okay.
Milestone events. I'm a big believer in you tell your shareholders exactly what it is you're going to do, and you just go off one by one, check them off. It can be sort of tedious, it can take a while, but I think you demonstrate that you're making progress, and then your shareholders appreciate it because they know that when you tell them something that's what you're doing. So our PEA is out this month. When that PEA comes out, it'll be a very important benchmarking event. I am going to be marketing in the UK, in Scandinavia, in Germany, and in Switzerland. I'll be marketing in October and November. It's just a key thing for people to understand is that the PEA comes out, and then there'll be a massive amount of PR and IR to get people to understand how interesting our company is and how much leverage it gives you to the underlying share price.
One of the events you're going to attend, by the way, is the Edelmetallmesse in Munich. First weekend in November, and of course we are going to catch up there too. Okay.
Super. Yeah, exactly. Okay. So one last bit about the team. As I mentioned before, the key thing here is a Sunshine Mining Company. The Sunshine Mining Company used to own and operate the Sunshine Mine in northern Idaho in the United States. The Sunshine Mine was a tetrahedrite silver mine, and so a lot of the know-how, experience, techniques that you use to mine a tetrahedrite deposit, we have, because of our team players, we know how to do that at Strieborna. It's a very important thing. The guys on our board are very helpful and very knowledgeable about this type of ore body. So that's the key thing I wanted to point out there. And that's it. So I hope you have a better idea what Global is, and I hope and I do ask I want to make it very clear to your to your audience and future shareholders, hopefully Global, is we're a small company. I'm fully aware of what we are. I have no delusions. We're not Rio Tinto. So if people want to talk to me directly, that's perfectly fine. I hope they do. I'm not going to talk to my PR person or whatever. I mean, I'm very willing to talk to anyone who wants to talk about the company if they have questions or need clarification. I am always available to answer questions for potential investors.
Okay, let me ask you two questions. One is about some exploration potential. So what do you see in this regards?
Yeah, let's go to two things. Here's our mine site on the right, right? To the north of us, we have a 150 square kilometer exploration license. And we know for a fact from geophysical work, geomagnetics and so on, that there are other structures in the neighborhood. The only reason we're not exploring them is I think we have to be generating our own cash flow first before we can start spending money on expanding. I think that's a key thing. But in terms of low-hanging fruit, if you see this long section here, the Strieborna long section slide, the zone of up-dip potential, do you see that dark blue sort of shape?
Yep.
There is a whole, we already have permitted the drilling stations to drill into that. And we're pretty sure we could add another 500,000 tons of ore with this type of grade, the good grade, because it's just a continuation of what we discovered and announced on July 7th. And we're almost, we're 99% sure it's there. It's just a question of putting holes into it to have the data. And so there is a potential to significantly increase the existing resource simply by doing, a modest 2,000–3,000 meter drilling program to extend along strike the resource of the existing Strieborna ore body.
Mm-hmm.
Okay. Another question just came to my mind. So usually a lot of the resource companies we're talking to, they play a game of, yeah, we might bring our project into production, but the easier way would be if we were taken out by a bigger company. But if I look at your presentation and all the preparations you already did, to me it seems obvious that you really want to bring this project into production, right?
Well, let me give you. I'll give you a little secret. I'll give you a little secret into the investment banking world. At the end of the day, none of us are doing this for our health. We're all doing this because we want to make money. And the way you make money in this business is you execute on a plan. And the management will always have in the back of their heads an idea of how much the mine is worth. And they'll always have in front of them the stock price, right? And if someone comes along and wants to buy out Global Minerals and offers a really good price that is above what we think the mine is worth, or is significantly higher than the current share price, then we sell. And everyone makes money and everyone's happy. I think the problem a lot of junior miners do, though, is that they're confusing one thing for the other. People buy you out because they think you have a good project that's going to go into production and help them out. People don't buy you out because you have a nice presentation and pretty girls at your stand at conferences. And I think way too many people in the junior mining scene have focused on the presentation and forgot about the actual underlying substance.
Okay.
Right?
Yep.
So we push the company forward to create a sustainable business, and we put the thing into production. If someone wants to buy us out, and if their number is higher than our number, then we sell it to them, of course.
Okay.
And that's the right thing to do for all shareholders.
Yeah. Okay, that's good. Another question about the cash situation right now. I think in your presentation it said 1.5 million. The related question would be not talking about this 30 million which you hopefully be able to raise in debt or some non-dilutive financings.
Right.
Is there any other financing you need to do in the foreseeable future just to keep going?
Yeah, absolutely. I mean, part of my marketing is I'm going to be speaking with a lot of commercial banks private equity shops in Europe as well as in North America. To basically make sure that 30 million or 25 million that is taken care of. However, whoever is going to finance this is going to want to see the company put up some money as well. Mm-hmm. And so I will need to do a share issuance. Unfortunately, that's just the way it is. But it's part of creating more value, so it's all good.
Yep.
Right? Now, in doing the share issuance, the key thing for me as a manager is to make sure that my share price has the maximum amount of information priced into it. And so I bet you can imagine that when the PEA comes out in 2 or 3 weeks, the PEA is going to give all of your investor audience a chance to say, when Strieborna comes on to production, this is what it's going to look like. 2 million ounces of silver production a year, $40 to $50 million of revenue every year, this kind of cash cost, this kind of cash flow. And your shareholders and the entire your investor audience and all of the world will know what this thing can become with modest capital investment. That I'm going to market to make sure everyone knows about it so that it's priced into the share price. And then I would do a fundraise probably around $3 million by the end of the year.
So keeping this in mind, so if your stock price would move up to wherever these 13 million warrants were outstanding,
right.
And they will bring in more cash into the company, then you would not need to do another private placement, right?
I wouldn't need to do a private placement if that happened, or what it would mean is I would have to I could borrow less.
Okay.
Right. I mean, one way or the other. Because again, a lot of people talk about dilution, but they don't realize that a lot of things that invest management says isn't dilution, it really is dilution just by another name. I mean, if you're hedging out upside on your production, or if you're putting in special debt financing that gives certain revenue streams, it's still dilution. It's just your share count doesn't change, but the equity upside that your shareholders have is less. That's dilution.
Right.
So yes, I mean, I'm trying to make things as simple as possible, have as low dilution as possible, but I'm not an idiot. I mean, we still have to put this thing into production, and we still have to push it forward, which means that I'm going to need more funds.
Okay. Talking about the share structure, we had the breakdown of the shares, but who are like the major investors, or what's the spread between retail institutions?
So we have Alamos Gold, and Alamos Gold owns about 14% of us, and it's almost by accident because Global Minerals used to be a subsidiary of another company that Alamos bought out. Okay. And so just by virtue of just they inherited this 14% stake. They're not buying, they're not selling. It's just there, and we're in touch with them, and they see it as a passive investment. I don't think it's going anywhere. Investec out of the South Africa, UK, it's a prominent mining bank. They own about 2%. A high net worth individual and his trust fund, the Childress Family Trust Fund, they own about 14% as well, or 15%. There are several Canadian funds that own collectively 5-6%. Okay. And management, together with this high net worth individual, owns about 20% of the company. And the rest is pretty much retail.
Okay.
Yeah.
So, Joe, any other question?
Nö, ich bin eigentlich durch.
Okay. I just want to, so I think we're done with our questions. So I just want to point out that it was really, at least to me, it was really refreshing to talk to you with your background of an investment banker. I think the way you approach this situation is way more analytical and down to earth than when we talk to other management teams. So that's very much appreciated. Just to summarize from my point, I really like the project. I think with Tim, you have the company has the right guy, kind of a troubleshooter, let's call him this way, who's coming out of the investment banking sector into mining and is applying these kind of knowledge and background from this very technical investment banker situation now to the mining. And I really think that's a really good approach, which I like. We are going to follow the story. I think that's the same for Joe. We are going to follow the story really close. We will hook up again at the Munich show, and I urge all investors, that are potential investors, or maybe just people that want to get some more details, to come to the Edelmetallmesse. It's free to entrance if you register on the internet, and then Tim, I guess, will be happy to answer all of your questions.
Yeah,
right?
Exactly.
Okay, maybe at the end, can we go back to the last slide so that people can see your website again and the contact data? Right. So globalminerals.com. Actually, that's easy.
Yeah.
That's the website where you can get. There's probably a presentation. This presentation is on the website, right?
Yes, it is.
Okay,
Yep.
perfect.
Yes.
So and don't hesitate to bother Tim, with any questions or inquiries. So from our end, Tim, thank you very much. It was again really
Thank
really
you.
interesting,
Thank you.
and we are going to touch base later on. Thank you.
Super. Thank you.